Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. U.S. GDP and the European credit situation, two topics of interest and conversation at today's roundtable, as we hear from Steve Reitmeister, our editor-at-large, our research director, Shiraz Mian, and market technician, Kevin Matris. Steve, I'm going to start with you about the GDP here. Good news, apparently, as the consumers powered a 3.2% increase in U.S. gross domestic product in the most recent quarter. So I'm going to ask you the same question I asked Shiraz in another piece.
Okay.
Is it time to get excited yet? Is the recession over?
The recession...
Because it's three straight quarters of growth.
I can't believe that they haven't officially already come out and said that the recession's over, but clearly we are on a growth path. But I wouldn't call this a phenomenal report. When you're coming out of a steep recession, almost a near depression that we had, that it's not unusual to see 6 to 8% GDP growth in the first quarter or two coming out of that. So last quarter was 5.4, 5.6.
I want to say 6.
And so that was kind of in the ballpark almost. 3.2 is a little lackluster, even though there's supposedly some healthier components to this growth, but it's not amazing in terms of, wow, we got a gangbuster recovery here. It's just everything above zero is good given where we were at last year.
Okay, and Shiraz, just to recap, because these viewers probably haven't had the benefit of seeing that other discussion that you and I did on tape. You're basically happy about the report.
I am. In fact, it took you quite some effort to tamp down my enthusiasm. In
that
session.
I couldn't believe it. He says it's time to pop the champagne cork.
So the internals of the report are moving in the direction which makes you comfortable that the recovery is sustainable. And that's what you want to see at this stage in the recovery. We see that on the consumer side, we see that the contribution from the inventories is not as huge as it was in the earlier reports. We see some evidence of very good investments in capital equipment and software. And we continue to see that there is no inflation on the horizon, which should keep the Fed on the sidelines. So yes, it's not as big and eye-popping a number as Steve would like, but the internals of the report are moving in a good direction.
All right, Kevin, even though everybody seems basically euphoric over the state of the economy,
the weakest
right?
euphoria
Probably
I've
with
ever
the exception
seen.
of me, all right? Would you agree, though, that it's going to take a number of quarters of further growth before we can actually say this is on a sound footing, this recovery?
Well, I mean, I do think we're on a sound footing. I think this GDP was good enough. And getting into the internals that Steve and Shiraz were talking about, the one thing that did catch my eye was final sales. Final sales is business equipment, business machinery, and this kind of thing.
Right.
And that is different than inventories because this suggests businesses are gearing up for long-term growth. And if this is where they believe their businesses are headed, that, in my opinion, projects some very good things for the economy. And I got to tell you, too, I think with the GDP and the economy growing at kind of like a slow burn, I think this is going to create an extended growth period, and I think this is going to last for quite some time.
Okay. Let's turn our attention to the European credit situation in the time that we have remaining. Shiraz, over the weekend, Greece got that bailout, $146 billion package that they were waiting for. Yet, this still remains a headwind for our U.S. stock market, right?
It sure is. In fact, the whole European credit question is not resolved to the market's satisfaction. There are still questions. The Greek government is making a strong effort to sell this very onerous austerity measure that it has to implement internally. And Germany is giving the good signals that they will be able to pay their share. And IMF, we knew all along, was on board. But the question remains, will we see this kind of dithering on the part of other bailout candidates if it comes? And that puts a question mark regarding the unity and the united leadership of the European experiment. So it puts a question mark on that whole a whole new market that was supposedly coming in the picture.
In a turn of events over the weekend, Steve, China decided to tighten their bank reserve rates. And Shiraz has always been kind of, having China in his sights as far as their economic situation.
They're obviously the emerging economy, and you can project 30, 50, some years down the road, they might overtake us as the world's largest economy, quite probable in that statement. But what they're trying to do is trying to rein in a perhaps runaway economy, some speculative excess, and so by raising their rates, trying to make it more difficult to borrow money, to slow down the rate of growth going on there. But just to go back to Greece for a second, if I remember correctly, the original bailout package for Greece was going to be in the neighborhood of $30 billion. That was 2 months ago. Now it's $140 billion. So how much do they have left for Portugal, Spain, Italy, Ireland, and so that's a great question. So I would not say, hooray, Greece is solved, because there's a lot of other potential problems coming on down the line.
I want to bring Kevin in here before our time runs out.
Yeah.
With all of this talk about the European credit situation, Greece in particular, is now a better time for U.S. investors to be focusing on U.S. stocks?
When you look across at these different countries, you can take a look at the U.S. and say, hey, look, while we have our problems, it still looks like the best place out there. And it's true, Greece is going to be an albatross to the European Union, and I don't think that we're going to be able to really count on the European Union for a lot of global economic growth. But the good thing is that, this Greece situation has been out there for many, many months, and it hasn't been able to derail the global economic recovery. And the good news is that I don't think it is going to derail the global economic recovery. The good news really is that they are not going to default on their next payments, and I think the market has breathed somewhat of a sigh of relief because of it.
Okay. That will wrap up this edition of the Roundtable. We hope the week ahead for you is a profitable one. Keep your eyes on the front page of Zacks.com for any latest changes with regard to opinion on this growing situation. And with everyone here, I'm Terry Ruffalo.